and welcome back. I'm Natalie MacDonald and you're watching Dukascopy TV. Now up next we're doing a little bit of an FX outlook here today. I'm joined by Chris Thomas. Chris, thank you so much for popping in and seeing us again.
You're welcome, Natalie. Thanks for having me again.
No problem. Okay, so first up we're taking a look at the dollar index today. Now this hasn't really moved very far this year, and given the fact that many people have really been trying to talk the dollar up, why is that?
Well, I'm one of those who's been trying to talk dollar up as well. The dollar index just hasn't moved much since we've been speaking about it, certainly over the last 6 months, possibly longer. It's tied into the US Treasury yields as well, and if you look closely at them, they've not really done too much either. They've been in quite a tight range. Now, we might even see them coming a little bit lower coming up over the next few weeks because it's quiet months and it's summertime, people enjoy themselves, the markets can move and drift a bit easier. So we might see 250 in the US Treasury yield, which would then imply the US dollar index comes a bit lower as well. This week we've got some interesting data out. We've got Janet Yellen speaking, and we've also got the US retail sales. So these will help to give us some indications of what's going to happen in the US economy and hence what's going to happen globally going forward. Now, off the back of that, once the Fed tapering comes to an end in Q4, we're going to start seeing US Treasury yields going higher, and at that point we'll see the US dollar strengthen, dollar index will strengthen as well. And so hence, going forward, you should be looking with regards to euro dollar, if it gets up above 137 or if the dollar yen gets below 101, these are good entry levels to get into dollar long positions.
Okay, now you mentioned there the euro dollar, and that does bring us on to our next pair that we're going to discuss. Now, if we consider the ECB for a moment, they've done a lot in terms of attempting to create a weaker euro and also in terms of fixing banking systems, but the markets haven't really responded. What else, if anything, can the ECB do?
So Mario Draghi has found it difficult to talk the euro lower. People just don't listen to him. However, when central bank expectations do start kicking in, we're going to see dollar strength, and hence euro will start to weaken, and we'll see the euro start coming towards 130 level against the dollar, going out 6, maybe 9 months' time.
So again, that's euro taken care of. Any thoughts then on the Swissy, say, for example?
Absolutely. Well, same situation against the dollar. We'll see some dollar strength later in this year. Swiss franc, it will weaken at some point too. If you look at the housing market, the house prices are starting to come down, rental prices are slowly starting to come down, jobs, private banks are merging, and some private banks are having to close down. NGOs are thinking about leaving certainly the Geneva area, so the job market is not in good shape either. Once Swiss people accept this situation, which expats are aware of, I think we're going to start seeing the Swiss franc get weaker as well, and hence certainly the dollar Swiss franc, that's a very good trade going towards parity for sometime early next year.
So last week we saw investors very concerned about a possible bailout of Portuguese bank BES. What are your thoughts on this and also the potential impact on markets?
Well, stress tests are coming up in the Eurozone. This is something that perhaps the Eurozone should have paid attention to several years ago. The UK and the US governments did stress tests on their banks, and hence the structures are more in control and better positioned now. The Eurozone still has a few messy situations which people still don't know about, and these will hopefully come to light in the stress tests. Now, this is the reason why we've seen Banco Espírito Santos coming out last week with possible problems, and there may well be more, but the stress tests will reveal this. What we've got to remember with markets at the moment is that there's little liquidity, given the fact a lot of people are on summer holidays already. So thin markets equal possibly volatile markets, and we must understand the liquidity situation at the moment versus the perception of risk in the markets. And you might see markets moving far more when the risk is not really there, just purely because of liquidity issues. So take care of that as well.
Chris, thank you so much for coming in. Always great to receive your insights. Thank you.
Thank you, Natalie.
And thank you, viewers, very much for watching. For more FX analysis and insights, do stay tuned to Dukascopy TV. For now, though, it's goodbye.